Controlling cryptocurrencies have been likened to containing water in your hands. It's impossible. We've seen jurisdictions like South Korea and China come down hard on crypto for the demand to spring up elsewhere. Canada and Japan are two countries who have proven to be favorable towards blockchain and are becoming crypto gold mines. The world of blockchain is Internet 1992. The Amazons, Googles, and Facebooks of the space are starting to become apparent. There is one company in particular that is strategically positioned as the most diversified blockchain play in the world, with strongholds in Japan and Canada. Do not miss out on the early positioning in crypto. To learn more about how to profitably ride this remarkable trend, visit crushthestreet.com/blockchain. Hello everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with Jeffrey Tucker, world-renowned speaker and writer, a thought leader in just the cryptocurrency space, as well as just Austrian economics, sound money principles. And he's with the American Institute of Economic Research. He posts there daily. So if you want more of Jeffrey Tucker, definitely visit the websites in the description area. Jeffrey Tucker, thanks for coming on crushthestreet.com.
Yeah, okay, well, thank you. Anyway, thank you for that very nice introduction. Yeah, I've kind of got my hands on a lot of things, very involved in the blockchain space and Bitcoin, and trying to add maybe more of an intellectual element to that. Is pretty interesting, because in the old days in the Liberty space, everybody was an intellectual and nobody was a practitioner, you know? So people didn't actually do anything, they just believed things. In the crypto space, we have kind of a little bit of the opposite problem. It's a nice problem to have, but everybody's doing something, but not everybody understands what they're doing or why. So that's a huge shift. So part of, I think, the value I bring to the space is that I'm very interested in the intellectual side of crypto and its history and its meaning, and explaining why it exists, why it needs to exist, and why it matters, and why it's going to change everything.
Well, you brought up an interesting point. A lot of people are doing things, but they might not necessarily know the meaning. But I would almost say that that's a function of all the money and all the capital that has been entering the space. And I mean, we were at the North American Bitcoin conference, and you could just see how many different projects there are. And you have some of the smartest people in the world trying to contribute ideas to the space to attract capital because of all the money and the euphoria that is in the space right now.
That's right. Yeah, it's incredible, and it really does, because from a purely intellectual point of view, there's nothing different today from October 5th, 2009. That was the date at which Bitcoin obtained its first market price, and speaking strictly, it was actually that day on which we had the proof of concept. This stuff can actually work. But it's not enough. In real world markets, people have to make money in order to pay attention. Human mind doesn't work slowly. We're not purely abstractions. We tend to think in terms of, how can this benefit me? And it took 8 years essentially for people to begin to really pay attention. And I'm happy about that. I think it's very good. But from an intellectual point of view, I don't think just the fact that it's profitable and a lot of people are making money at it is proof that it's meritorious. You really have to have a justification and understanding of what it's all about.
Right. Well, the event that you were at in Austin here, it was more of an intimate event. Trace Mayer was there, and even Roger Ver was supposed to be there, but
right.
he didn't show up. But you took his role
Yes.
and went back and forth between Trace Mayer regarding the pros and cons of Bitcoin versus Bitcoin Cash. And of course,
Right.
in that event, you took the side of Roger Ver to facilitate the conversation. But I'd love to just get your thoughts, following that event, and actually following the fact that we've seen Bitcoin fees come down quite a bit since that event, right?
Sure. But you notice the fees have come way back down, and it feels a lot more like 2016.
Yes.
But the funny thing is that the velocity of Bitcoin has collapsed. So you have to ask yourself why. I mean, just given that it's actually you can actually send it and receive it very cheaply now, unlike say a year ago or 6 months ago. Why hasn't the velocity come back? And I think that there's a number of things here. One is that 2017 kind of shattered the culture of using Bitcoin for daily transactions. That had developed over the previous 5 and 6 years. I mean, in the old days, my friends and I used to send it back and forth, with delight, over pizza, and we loved it. And then that just kind of ended. So I think that probably, the market dominance of Bitcoin itself, basically collapsed in 2017, and there are all these other altcoins. And I think what people have come to realize is that we need a wide choice in currency. There's not just one currency we need. Not the dollar, it's not Bitcoin. It's innovative technologies that are somewhat culture. There's a branding thing. Each one is slightly different. How many coins there should be. I don't think it's something anybody can know outside of the box. I mean, I was at CVS the other day and I looked at the toothpaste aisle because I don't know. For some reason it takes me like a year to go through toothpaste. So it's been a long time since I've been to the store and bought toothpaste, and I was shocked. I was like, wait a minute, there's like 1,000 toothpastes here. What do you want a toothpaste to do? I'm gonna clean your teeth, make them whiter, blah blah blah. Why do you need 1,000 toothpastes? Well, I don't know. you know,
Right.
and it's a similar thing with these coins. But the Bitcoin Cash thing, I think I won that debate hands down. In fact, I have to say I think I was easy on Trace. I mean, Trace's argument, was highly technical, but it was also very much focused on how you can make money in the Bitcoin space, and it was like how to buy and hold in the most secure possible way. And he ended his whole presentation by saying everybody should be running their own node and holding all their money on Trezors. I mean, the problem with this is that it really doesn't tap into what used to be a real democratic ethos associated with Bitcoin, which is that we're going to change the world with this stuff. We're going to empower the poor. We're going to bank the unbanked. We're going to unleash all kinds of human creativity, include people who have been traditionally excluded by financial institutions. There was a beautiful and exciting utopian vision associated with it, and it wasn't just about hodling. It was about really using the stuff. And you asked me whether or not I was just playing a role. Was I just playing Roger, or was I serious? And the truth is that I think everything I said I was serious about. I'm not one of these people that's interested in starting a civil war between coins. I'm very happy if Bitcoin becomes a final settlement layer, and if Lightning Networks turns out to create really nice channels for fast, cheap sending and receiving of money. That's all great, and I'm not a guy to rail against Core. I have friends of mine that are very much involved in the Bitcoin Core project. At the same time, I do think that it took a different path in 2017. And it was a nice problem to have, essentially. Basically, Bitcoin became so popular that the network got really crowded and miners were able to charge really exorbitant fees. That's essentially what happened. Like I say, it was a victim of its own success. But I think anybody who says that that this was supposed to happen or that this is a good thing is not being fully genuine, actually, because it was a disaster for Bitcoin, actually, and it changed the whole culture of the sphere. Suddenly it went from, oh, this is cheaper than credit, more secure and faster than credit cards. Just settlements, instant settlements for nothing. Suddenly that was like, gone from the propaganda. It was just a very strange thing to wake up one day and find that we had a completely different rationale for why we should be using this coin. And as for the block size, I mean, I am unpersuaded by these people who say that it should only be 1 MB for forever. In fact, what's interesting to me is that not even Core says this anymore. Everybody recognizes that Bitcoin Core is going to increase the block size. It's just going to happen Uh, and it's going to happen in 2018. It's going to happen on a regular schedule. It's going to continue to increase, which is kind of what happens with software. I mean, that's, Microsoft Word got bigger and bigger and bigger, and our memory, the memory on our hard drives got bigger and bigger. That's just Moore's law at work, and there's nothing wrong with it. And to freeze a block size in place, as happened, I don't think it was even anybody's direct intention. I think actually what happened was that the consensus rules just kind of didn't favor Bitcoin in a way that people had expected it would, and you couldn't really get people on the same page about increasing the block size. And there was a decent compromise proposal out there. It was called SegWit 2x that I thought would have been, and if that thing had gone into place, if SegWit 2x had been adopted, there would have been no Bitcoin Cash, and everything would have been fine. But it didn't get adopted, and Bitcoin Cash was created as a kind of like, okay, I don't care whether you guys can get your act together or not. This technology is too important, and it belongs to the world. Let's go out there and fork the chain and make it happen. And I think it was a heroic decision, actually, and I'm all for it. As I said, it doesn't mean I'm against Bitcoin. It could be that Bitcoin will be the final settlement layer, and I have the highest respect for Bitcoin, and I hold a lot of it. But at the same time, we need something we can use, and there's a lot of competition out there for the category of something we can actually use in daily transactions. Obviously Dash and Zcash, and there's a lot of really interesting things out there, and that are being used, in fact, and are prepared for the scaling. But I think this is one thing we have to understand about Bitcoin. It's still a kind of an experiment, and we're learning from what's happening around us. And I think the mess that happened in 2017, where you couldn't send $20 without spending $7 and waiting 24 hours or whatever, it got really bad there for a while. I don't think that's ever going to happen again, because it created a real mess. And the backers of Core who deny this, I think, are just being disingenuous, actually.
Sure. Well, what's interesting is how resilient Bitcoin has been throughout this, and it is exciting to see the fees come down. But I know what you're saying about the velocity of money. Maybe it's just a function of people not using it the way they were in the euphoric state of 2017.
Yeah. And I'm going to write about this actually tomorrow, but there's another reason why the velocity has fallen, and that's just simply because of the anticipation that of the deflationary environment, and that's what happens when a deflation. People use the currency that has an anticipated reduction in purchasing power, and they hold on to the currency that they anticipate is going to have an increase in purchasing power. That's just the logic of the situation. You hold on to the money you think is going to be more valuable, and you spend the money you're pretty convinced is going to be less valuable. Right.
Well, and having said that, the interest in Bitcoin in the last month and a half here, I just did it right now on while you were saying that, Google Trends, it's collapsed since December, January.
Interest in Bitcoin.
Yeah, if you just go to Google Trends and type in Bitcoin, the euphoria of just the people looking into it, and just the crowd mentality in terms of searches, and even some YouTubers, they're reporting lower amount of views on videos. And I'm not saying from a fundamental perspective Bitcoin is going anywhere, or cryptocurrency, but I know. But yeah, I'm just saying, from that stereotypical, maybe euphoric stage, we have seen a pullback in that.
Sure.
And something.
And that's probably good. I mean, what happens always, and it's so funny because we live in real time, and it's always a shock to us. But the whole history of markets has been this way. When something is boring, the smarter buying. When something's exciting, the smarter selling. But it's also, the contrary is true. The noobs lose interest. They think something's terrible if nobody's talking about it. It's not in the headlines, and they forget about it. Then when everybody's talking about something, and you're hearing people in the street say, "Hey, have you bought Bitcoin? You bought Bitcoin?" It's probably a good time to stay away from the ATMs. But it's hard for people to go contrary to the information inputs. People tend to do what's in the air around them, and buy Bitcoin was all the rage in November, December, and whoops, look what happened.
Well, something you said about toothpaste that reminded me of what Rick Rule told me when he was talking about Bitcoin. I was asking him his thoughts on it. And he said competition for money is good. Competition for anything makes whatever product you want or whatever product that rises to the top better. And that's kind of what I started to think about when you were describing, I don't know which cryptocurrency is going to be at the top, but in my mind, whatever one does go to the top, I expect it to be really strong and resilient and the best because of the competition.
Yeah, I think that's right. Crucially, this competition will never end, and I think this is where people get a little confused. Somehow, it's fascinating to me. Monetary economists have thought for a very long time, as much as 100 years, or even more, that money tends to sort of naturally consolidate, either regionally or nationally or something, so that there's ideal currency zones. Once you get a really good money, all the other competitors go away. Somehow there's supposed to be efficiency associated with a single currency. You pick up any book on money and banking in any college classroom, this is what they're going to tell you. That there doesn't need to be more than one money. Once you have good money, it functions as money forever. This is a view that the advent of Bitcoin has completely shattered. And the reason is that Bitcoin is a technological improvement over paper money. And I don't think that, while people imagine that there were lots of technological improvements you can make in payment systems, I'm not sure before 10 years ago there was anybody aware that you could viably make a technological improvement in the production of money itself. We thought we knew what it was. And it's interesting because you go to any monetary economist, you're like, what is money? What are the properties of money? And they're going to rattle off a list of traits. Well, it's got to be fungible, uniform quality across all units, high value per unit of weight. There's got to be a certain divisibility associated with it, and portability. They just go through these traits, which are like empirical descriptions of what money looks like. And so the problem with all that is, after rattling off all that stuff, you think you know what money is supposed to be. It's a little bit like saying, I know what shoes are supposed to be. They're supposed to be made of wood. And it wasn't before Bitcoin that we began to realize money is something can be more than we thought it could be. So in the old days, we thought that the function of money, I'm not talking about its properties, but its function, was to provide a store of value and a means and a unit of account, a store of value and a unit of account to facilitate trade. And we thought that providing settlement services was something separate from money itself. So that's something that belongs to banks. That's something that belongs to credit cards and to credit markets and that sort of thing. That's the settlement layer that it takes place outside of the existence of money itself. Now, it's true, like if I hand you $1 and you're right in front of me, then that transaction is finally settled. But that's not the money that caused that. The money was just incidental to that. So money has to have a store of value and a unit of account, but in order to make it operational, you also have to have some means of payment. In the case of hand-to-hand currency, it's my hand, handing you a dollar bill. If our geography is completely separate and we don't have that advantage of proximity, then we have to rely on a third-party intermediary. But Bitcoin comes along and wraps in the settlement layer into the store of value and the unit of account functionality of money, and now you've got a third job that money does that nobody really knew before that money itself could do. And of course, that was because of the blockchain and the distributed ledger, which tracks ownership rights and provides a beautiful audit trail and keeps track of who owns what. And it does that as an integral function of the money itself.
Wow. Yeah, I love listening to you articulate these ideas, and I can tell that's your passion, Jeffrey. Jeffrey, I'd like to get some thoughts here on big news. We're going to switch gears a little bit in regards to tariffs and just kind of like the Austrian economics of this whole thing, and just your general thoughts on what Trump did in regards to the steel 25% tariff on steel and 10% on aluminum. What are your thoughts on that?
Yeah. Okay. So during the campaign, everybody thought, well, this Trump guy is crazy. I wrote a whole book on him, explaining that he's not just a marketeer, he's not just a kind of an idiot. That he's actually secretly controlled, whether he knows it or not, by a long tradition of right-wing Hegelianism, which has, and I wrote a book on this, traced it from the early 19th century all the way up through the present, actually not entirely true, up through World War II. And a central pillar of that worldview has always been protectionism. Like you want the nation alone to be the productive unit, and any trade outside of that is generally regarded as problematic, a security threat, or parasitical, or something like this. This is really a central part of the right Hegelianist tradition. And it began in the 1840s with a book by Friedrich List, who was a German economist who moved to the United States, very influential. He wrote a book called, I think it was called something like The National Economic System. It had a huge influence. It was pro-protectionist, anti-free trade, and therefore anti-liberal. And I always assumed that was Trump's core, So then he becomes president, and I mean, he delighted us. Not entirely. I mean, his immigration stuff against Muslim nations and everything, it was really wicked, and he emptied out a lot of universities, and it kind of gave the U.S. a black eye in many respects. But he gave us a decent Supreme Court justice. Then he cut taxes. Well, then he started cutting regulations, which was like so merciful. In fact, that's, I think, a major reason for why the economy is doing so well. And then a decent tax package. At least we got some little bit of liberality introduced into corporate tax rates and income taxes, and that was a decent tax package. And I was just pleased by it. And so we all began to kind of relax a little bit, like, well, maybe this guy isn't crazy. Maybe he's not this authoritarian. Maybe he's got some sense. Maybe he just understands as a businessman that government is annoying, and the less government we have to deal with, the more productive we'll be. I mean, I think a number of us, even I, began to kind of relax a little bit, like, it's not going to be so bad. And then one day you wake up, and he's got this harebrained idea, of let's destroy the world economy, with new taxes, new regulations, and it like flips entirely from his 2017 agenda to really rally around this wacky nationalist, old world, reactionary, revanchist, autarkist, protectionist program. Like he wants to take us back to mercantilism and the times of the despots and the kings and the dictators. And I just can't. It's shocking. And apparently, he does believe it. It's a tribute to the power of an idea. That something so crazy and so completely unjustified, where all of Wall Street, and the Wall Street Journal and the New York Times and the New Republic and National Review and the Republicans and the Democrats are all saying this is insane. Like, we know that much. Maybe we're not too smart about fiscal policy. Maybe we're not brilliant about monetary policy. We're a little bit dopey on environmental policy. But we at least know that there's gains to be had from trading with people outside of our borders, and both parties benefit. And at least we got that much from Adam Smith. And it turns out Trump apparently doesn't even understand that. And he's obsessed with this crazy thing called the trade deficit. And which is funny, like whoever invented the phrase trade deficit should just be um, bodies should be exhumed from the graveyard, and we should just jump on it and hurl it into the river, because it's a very evil concept. It is not a deficit. This is it's just an accounting fiction, actually. Every producer you buy from, you have a trade deficit with, because they're not buying the equivalent amount from you. But this is the more you have a complicated division of labor and production structure, the less these accounting fictions matter in the slightest bit. But he's got it in his head that foreign nations owe the U.S. $800 billion. And it's like he can't shake it. Maybe he can't sleep at night or something. He wakes up in the morning and thinks we're being robbed. I want that money. I don't know what he's thinking.
Jeffrey, okay, I'll just to facilitate this conversation here, obviously I think tariffs are a direct tax hike. I think it's a problem. It raises prices. It's bad for jobs. But maybe some of the indirect benefits that we haven't thought about yet or are just the shakeup. Maybe Trump is bluffing. Is it possible that he's trying to shake up some of the rules that Mexico has not participating with, or just rearranging NAFTA or agreements between the EU and China? And if he gets some of this, maybe that is positive for the U.S. in the way he's going about it.
Yeah, I'd sure like to think you're right, but it's just such a difficult thing to guess what this guy is up to, at any one time, and he could completely flip. In fact, I think a day ago, haven't we seen this before? I mean, so Trump says something really aggressive, and people go, rah, 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 that's terrible. And then the next day, he hints and hints and hints that actually he didn't really mean that. He's not going to really do that. And then the press reports that. Then the next day comes around, and he tweets, no, 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 that's wrong. I am going to do this thing. And so, I don't know, sometimes it seems like he just every day wants his name in the newspapers. But actually, I think this protectionism stuff is serious. He's got this economic advisor named Peter Navarro. I hope that he has a falling out with him like he does with everybody. But this guy is nuts. I think he's from the University of Southern California, and I've read a lot of his papers, and I've never read so much economic nonsense in my entire life. And this guy really has his ear for now. We'll see what happens. It was a great thing when the stock market completely collapsed the day he announced his tariffs, because that's one way to get Trump's attention, actually.
Sure. Jeffrey, I know we have these initial reactions to the stock market, but we know that the market and the perception of the market lives in this alternative reality. And I'll give you an example. I remember this happening quite a bit during, the Obama presidency, and that was when good economic news would come out, stocks would actually fall because the market was anticipating tighter monetary policies, the end of NERP and the end of QE. So I'm wondering if maybe in this world of alternative reality markets, this might be good and stocks go up instead of what everyone thinks they're going to do.
Yeah, it is a fascinating thing how Federal Reserve economics kind of flips market psychology in a sense. Like bad news becomes good news because they expect that the Fed's going to flood the economy with money, and then
bad news is good news.
Yeah, but what's odd about this? It's not clear anybody actually believes this. It's just the way markets work is like if you believe other people believe it, and you believe those other people believe that other people believe it, then it just becomes the dominant thinking. Not that nobody has to actually believe it. You just have to believe that somebody else believes it. Then you act on it. And Wall Street's constantly desperately looking for some kind of basis on which to know to know whether to buy or sell. And the Fed's kind of a big player on the block. And so it's not even clear anymore whether or not the Fed is capable of generating an easy money environment anymore. It's so much just contingent upon the banks, and the banks are ever less and less powerful. And even manipulating interest rates, it's not clear to the extent to which the Fed can actually use that tool as a way of generating hot money on the street, since it's so contingent upon um, consumer behavior, velocity of money, and the willingness to lend, and the degree of risk aversion from the lending community itself. I mean, the Fed's power has been basically diminished really dramatically. And I think it's going to become increasingly obvious. I mean, it was obvious really after 2008, that the Fed is not all it's cracked up to be. And I think it's going to become increasingly obvious.
All right, everyone. Jeffrey Tucker. Jeffrey, if people want to learn more about what you do, where would they go and what would they find?
Sure. Well, I post every day, believe it or not. I write some big treatise on the American Institute for Economic Research website, which is aier.org. And got a lot of side projects. I'm running a hedge fund, Vellum Capital. I'm the CEO of the Atlanta Bitcoin Embassy now, and I've got my own website. So I think if you Google my name, Jeffrey Tucker, you're just going to fill up your screen. You're going to stay busy for a while. So.
All right. So, well, hey, thanks for coming on Crush the Street. You're welcome anytime. I appreciate your time.
I appreciate it very much. All the best.